Well, thank you everyone for joining us again on this second installment of the property insurance review with Sterling Fairholm of Reliance Insurance Brokers. In the last session, we talked about homeowners and condo insurance policies. In this segment, we're going to be talking about residential rental property insurance policies. And then in the next two segments, we're going to be talking about vacant properties or builder's risk policies for our flipper clients, and then some other additional topics in segment number 4 as well. So Sterling, would you please, again, to get us started, introduce yourself and overall what you're seeing in the rental property insurance marketplace today?
Absolutely. So my name is Sterling Fairholm. I'm owner broker at Reliance Insurance Brokers. And what we're seeing in the rental sphere is twofold. First, properties of 5 or more units, which are actually technically considered commercial properties. What we're seeing is those, along with many other, being non-renewed by State Farm. So right now there's a big influx of those properties hitting the market. And as to be expected, a lot of the ones that State Farm are canceling are the ones that are a little less desirable. Typically it's based on age, location, brush. Those are the ones that are getting non-renewed. We're typically seeing that they may be non-renewing all of their habitational commercial risks. And what's interesting with State Farm is that they were writing multifamilies, 2, 3, and 4 units on commercial policies. So it does mean that people in the habitational in non-commercial, so 2, 3, and 4 units, which are all considered residential, those are also getting stuck in this cancellation process. Because of that, there's kind of a flood of rental properties that are hitting the market right now, looking for options. And there are some specialty programs for rental properties, but in most cases, we still would always prefer to package the rental with home and auto. So we're always going to approach the homeowner's insurance carrier, auto insurance carrier first. And a lot of those companies, the larger ones, the Travelers and Liberty Mutuals, the ones that are still doing business in California right now, they do require you to have your home and auto to do a landlord with them. But there's still lots of options for landlord only coverage. There's some specialty companies that are offering just landlord. That's all they do. And they're a little bit selective on what they take. And a lot of it comes down to the upgrades, a lot like we've talked about in the other segment. The things we're going to need to know is roof, plumbing, HVAC, and electrical. We're either year reconstructed or the year replaced on those items. Roof is usually the most important.
Okay, so Sterling, step back for us a little bit. You're an independent insurance broker.
Correct. So I represent dozens of carriers. All that matters is the type of risk. For me, it doesn't necessarily matter what company we're targeting. The goal is to find the right product for their client and for what their situation is. So everyone's situation is different. Every zip code in California is different. So we're not typically just looking at a market. We're looking at dozens of markets to find the right fit for the client.
Okay, and when you say dozens of markets, you're talking about insurance, property insurance providers.
Correct. Yeah. So it could be your large national brands, your Nationwide, Travelers, Liberty Mutual, Mercury, Progressive, those carriers, or it could be specialty niche products that only deal in certain areas. Niche products like OB and Steadily, Bamboo, carriers that only do properties. So it depends on the situation. We'll be looking at it both ways, as a package or individually.
And Sterling, do you provide property insurance outside of California?
We do, though the market has dictated that it's gotten more complicated. So our agency, we are licensed everything west of Colorado. So most of the Western United States we are licensed in, but some companies have changed the way they're allowing agents to do business. Some states have made it so that you can't do outside of your licensed primary states, or in our case, which would be California. Nevada's gotten a little difficult. Colorado's gotten a little more difficult. Arizona was hit or miss. So some of the states are requiring the agent to be licensed and actually domiciled in that state to do business.
Got it. Okay. Yeah, we have investors that have properties, rental properties in California and out of state as well.
Yeah.
I wanted to understand that. Okay. So then stepping back a little bit, what do landlord insurance cover and what do they not cover?
Sure. So a landlord policy is very similar to the homeowner's policy. They're written on a different form. So landlord is written on what's called a dwelling fire or a DP form. There's a DP1 and a DP3, which is very similar to what we talked about with homeowners that has an HO3. A DP3 policy, which is your preferred special form policy. That type of policy is going to act just like a homeowner's policy, except for a landlord. So the difference is, as a landlord, you're not really worried about your personal belongings. You have a little bit for maybe appliances or miscellaneous items, but we don't need hundreds of thousands of dollars of personal property. And so that is taken away and replaced with things that do matter. Loss of rent is a big one. So obviously, if you're collecting rent monthly and you have a claim that forces those tenants out, you want to make sure that your rent is recouped. The insurance company will continue to pay what you're getting in rent while the property is being remediated, repaired, and until you can get renters back in there.
Okay.
Now, there's more to it though, because there's the biggest problem as a landlord, or the biggest concern besides the building itself, is going to be liability. And that you have to have a landlord policy to get the right kind of liability. If you have a homeowner's policy, but you rent the property out, you now do not have liability as a landlord because you've said that this is a house you occupy as your home. And so for a landlord policy, there's the regular liability, just like you would get, except it now extends to you being sued by a tenant. But what you're sued for is really important. And there's an endorsement that should go on any landlord policy called personal injury. Now that sounds like something that involves an actual physical injury, and it doesn't. It's covered, personal injury is covering wrongful eviction, privacy invasion, and other items that would be related to your practices as a landlord, not necessarily just someone getting hurt. Frivolous lawsuits are obviously a problem. California, especially, is such a litigious state. So when we're talking about personal injury endorsement, where we are talking about someone that you're evicting, then trying to sue you for wrongful eviction, you would like the insurance company to defend you in that case, because that, that's costly lawyer fees and so on. Same with privacy invasion. You didn't give them enough notice before a plumber came in, or you didn't give them enough notice on shutting off the water. And I mean, these are all things that someone could just file a complaint or a suit against you for. So that habitational policy wants to include a personal injury endorsement.
Are all of these automatically included in the policy, or do you have to specifically request for loss of rent, for loss of privacy, and these other coverages?
So it depends on the carrier and how they set up their basic form. Typically, loss of use, which is also loss of rent, is going to be on a policy, but the calculation needs to be done, because when let's talk again, we're here in California, rents are high. So if you're renting a property, or let's say we're using a multi-unit property because rents are going to be high there's a good chance that what comes standard isn't actually enough to provide loss of rent. Personal injury is not a standard endorsement. It has to be added, and not all carriers offer it. So it's another important item that has to be looked at. Now, what's not covered by landlord insurance is the same as homeowners insurance. Still, we're at earthquake and flood are never covered by homeowners or landlord policies. And then at the same time, you can't use your homeowner's insurance or landlord insurance for maintenance. So if the roof is old and it's wearing down, it's not an insurance claim, it's just home maintenance.
Yeah. What worried me a lot is actually mold. You said that, when landlords can't even enter very easily, and then there's mold and they don't report it for months.
Yeah, and there's definitely a flaw in the system with that, because mold and mildew remediation is only a coverage when there's a water claim. So when you file a water claim, part of that water claim will be mold and mildew remediation, meaning cleaning any mold if they're growing, or remediating it, preventing future mold growth, and so on. Just a claim for mold and mildew is not available, because mold and mildew isn't something that happens instantly or suddenly and unexpectedly. It's something that happens over time. And so that anything that takes time is something that is going to be excluded from insurance, because fraud. You could have someone that just knows that there's a problem, forgets it, leaves it there, doesn't want to deal with it, the problem gets horribly bad. It's now a massive undertaking, and insurance will deny that claim because it's obvious that it's not sudden and unexpected, and it also wasn't part of a water claim, because the mold would come from some kind of water leak or water damage.
So are there any policies for mold?
They're not for just standard mold. There's no way to get coverage for just mold. It's always going to be part of a water claim.
Okay, so as a property owner, when on my rental properties, I always require renter's insurance. So what point do renter's insurance come in versus a landlord's insurance policy? So for example, if the tenant's car gets broken into while in the driveway.
Yeah, so the tenant's car getting broken into the driveway would be a renter's policy claim for them for things being stolen. It would also be an auto policy claim. You have no liability for that and there's no insurance that you would cover that would cover their belongings. Similar to if the property is broken into, you as a landlord, you're not covering their personal belongings. You are only covering yourself, what you own, which is the property and anything you have there. So the tenants carrying liability insurance and property insurance on a renters would extend to their personal belongings. It also extends to the liability, which as a landlord is what you care about, because you want to make sure that if they have guests or if they have people over and someone gets hurt, that you have that first layer of protection, which is the renter's policy, before it falls on your lap as a landlord. Now, there's a good chance that that tenant or that guest of the tenant files a suit against you as the homeowner as well. That renter's insurance will kick in as well as your insurance through what's called subrogation, where the insurance on the back end will go after the landlord and or the tenant's insurance for whoever's actually responsible.
That's what that big word means.
Yeah.
So
if insurance companies fighting on the back end is subrogation.
Okay, so I think if I remember that process correctly, if there is a water damage claim, like happened to one of my clients, the landlord would talk to the landlord's own insurance policy, and the tenant would talk to the tenant's own renter's insurance policy. And behind the scenes, they would negotiate with each other on who's responsible. But we as landlord, we're not supposed to talk to the tenant's renter's insurance policy.
You wouldn't be able to. The tenant's renters wouldn't speak to you in a claim situation besides getting a statement. And the tenant's renter's policy is only going to cover negligence. So if that water leak situation happened and nothing was negligent on the tenant's part, it's going to be the landlord's policy. A pipe breaks in the wall, it has nothing to do with the tenant. It wasn't their fault. So that their insurance isn't going to cover anything because of it. Conversely, if they plug the sink, turn the water on, water runs, water overflows everywhere, there's negligence there. We had one recently with a house fire where the tenant decided to put every Amazon box, the empty box that they got, into the closet that also has the furnace. So you can imagine that was a poor decision with the furnace having obviously a lot of heat, open flame with open flame and gas, and that did ignite a fire in that room, and there was negligence involved in there. So it does depend on the type of situation. Negligence is the only time that a renter's policy will cover something on the structure.
Got it. Okay, what about pets?
Yeah, so one thing for sure is pets are not pet coverage for a pet doing damage to carpet and things like that is not a coverage on landlord insurance. So wear and tear, which is how they'll classify it, is just back to maintenance. A person would have to trash the house for it to be vandalism by a tenant. Heavy usage, so worn floors or worn carpet, things like that are not going to be covered by landlord insurance. Whereas doors pulled off, holes in the wall, those are vandalism. Those are going to be coverage on it. When a pet makes odor stains and things of that nature, it's not a coverage on renters or landlord insurance. So that's why I think people are pretty selective about what they allow and what they're comfortable with in their units when it comes to pets.
What about pets attacking neighbors' kids?
Yeah, so that's a dog bite situation, and that is renters first. So if someone has a renter's policy, as long as they don't have one of the excluded breeds, which there are a number of them depending on carriers, Pit Bull, Rottweiler, Akita, Chow in some cases, Doberman Pinschers, there's a number of them, then the tenant's responsibility would be for the dog bite on their renters. The landlord's policy for liability would defend them, but they'd have to be found negligent as a landlord, which means either not fixing a damaged fence that let a dog through, something like that could considered negligence, then would allow that renter's policy or someone to come after you as a landlord and have that landlord policy kick in.
Yeah, so as a as a landlord, as a property manager, I would always require details about the dog and get photos and check to see if it's an attack breed. But what I don't have control over is if they, after they have moved in, they get another pet, another dog, or they babysit their friends' dogs, and that's where I actually worry.
Yeah, and taking good care of the property is important, right? Because you've limited your negligence. If you've done everything right and the tenant left the gate open, the dog ran out and bit another dog, and it's very unlikely you are going to be sued or found negligent in a suit. Most of the time, it's going to be the dog owner that is going to be, responsible. But the main thing, again, going back to what we talked about earlier, is more about just being defended in frivolous suits, because that does add up. So you want insurance companies, lawyers to defend you rather than you have to hire your own.
Got it. Okay. So then let's talk about multi-units. Earlier, you talked about State Farm getting out of the commercial space and also affecting some of the duplexes and triplexes. Are there any special insurance underwriting for duplexes, 3, 4, 5 units or more?
Yeah, so the really important thing to know is that 1, 2, 3, and 4 are residential. So those are considered residential properties. They can be insured commercially in some cases, like State Farm has been doing. For the most part, it's not done as much anymore. So 1, 2, 3, and 4 units are residential. 5 or more are considered commercial. So what the big part is that 5 or more now is in the apartment field. And that is typically more expensive and has more underwriting involved. Whereas 4 or less units is going to be typically less expensive and have more options available in the standard markets because they're considered residential. Any of the carriers that we've discussed earlier, Travelers, Liberty Mutual, Nationwide, Allstate, Farmers, those personal lines programs will have an option in a normal market for a landlord policy, 1 to 4 units. Whereas as soon as you hit 5, you're immediately going to a company's commercial division, and not all of them have that.
Okay, so there are fewer choices for commercial property insurance. Are there other, and it's more expensive, are there any other special underwriting requirements that our investors should be aware of?
Yeah, not necessarily any major underwriting requirements. It's the tightness of underwriting right now, specifically on 5 or more. When you're going to commercial, it's much tighter than 4 or less. So year built requirements are really, really tight on habitational. Most companies have gone to 30 years or less as far as year built, 50 years or less with full updates. And then once you get beyond that, you're having to go to what's called non-admitted or surplus lines. And that is immediately more expensive. Frame of reference is really right now, I'm working on a 5-unit building that is getting canceled by State Farm. They were paying about $5,000 a year. State Farm, their only option right now, or their best option right now, is about $15,000. So the price tripled by being non-renewed because it's a San Francisco property, 80-something years old, some updates, but it doesn't fit into any residential program. So the commercial carriers are much more expensive. Now, from an underwriting standpoint, they definitely pay a lot more attention to those updates on the commercial side than they do on the residential side. Residential, usually, roof is very important, but you can get away with a house 50 years old that hasn't had plumbing redone or electrical redone. You can't get away with knob and tube wiring and things like that, but you can get away with some of it. On the commercial side, you can't get away. They want everything in the last 30 years.
That's so difficult when there's tenant protection.
Yeah, there's a huge gap and hole in the industry right now because of, especially here in the Bay Area, where we're talking about San Francisco, Oakland, up and down the peninsula. Properties aren't 30 to 50 years old. I mean, these are mostly all built in the 60s, 50s, all the way into the 1800s. Alameda, I mean, it's rare to find anything pre 100 years old in Alameda right now. So there's a problem and there's a hole in the market. And so we're trying to obviously keep people where they are rather than have them move insurance. But when they have to move, it does tend to be more expensive and probably not quite as good of a package.
Yeah, it sounds like significantly more expensive as well.
Yeah.
So is that where California Fair Plan comes in? Does it have rental property insurance?
Yes, so California Fair Plan, just like everyone else, is going to consider a rental property 4 units or less as residential, 5 units or more as commercial. So their 4-unit or less option is going to be fairly simple, just like it would be quoting a regular carrier. The 5 or more comes with a huge amount of hurdles, and typically we try to avoid it.
Got it. Okay. So one of my clients recently had a problem getting California Fair Plan because the rental property was held in the name of the LLC. But I know you did one for us, for Eric and me.
Not a problem.
Okay. And
Yeah.
how long does it take to get rental property insurance from California Fair Plan, at least a quote?
Yeah, it depends. So we can get an instant quote with numbers. Now, to get that quote approved, it does vary. What we're seeing is that the higher value properties, so something that's over 1.5 million to rebuild, is turning around quicker because they ask for more photos. We have to upload extra documentation. So those are typically turning around almost same day. On the smaller rental properties, smaller properties, we're seeing typically maybe a 2 to 5 day turnaround, which is better than where we were this time maybe a year ago. But it is a little bit out of our hands, so we're just submitting and hoping for the best. So going back to something we talked about before, if you're purchasing or in the process, or you have a cancellation, get numbers sooner than later, only because you just want to be prepared and not get stuck waiting for them to respond.
Right. Okay. So we talked about this a little bit earlier, liability coverage. And if you think about our investors, many of them have their primary residence in California. They have cars, and then they have rental properties in state, out of state, some of them in the LLC, some of them in LLCs that are just in name only, but they still report their the rental income for the LLC in their personal tax return.
Mm-hmm.
So would you go a little bit over how do you do rental property insurance for when the property is owned in an LLC, and then how does the liability coverage work in that sense? Yeah.
Yeah, so it's going to depend on the carrier. So the insurance carriers all require something different. Some insurance carriers will want the trustees to be named as the insured and the LLC to be named as additional insured. Some carriers will allow the LLC to be the insured, and then we add the trustees as the additional insureds. What we want to be is we want to do both either way. And the reason for that is because it depends on who is named in the lawsuit, and we want both parties to be covered regardless. So when we're talking about defending someone, which is, you know, the whole point of the lawsuit, is we want the insurance to cover whoever is named in the lawsuit. So whether it's the LLC only that's named, or if it's the LLC and the owners of the property, or if it's just the owners of the property, we want all of those scenarios to be covered under the policy. Now, there are some carriers that just won't do rental properties in an LLC, and that is something we have to go around. So when we're talking about a landlord or a multi-unit, we are trying to figure out, okay, who's the entity, who are we looking at, because it does take certain carriers out of options. But we are going to pay attention to what that carrier cares about. So whether that carrier allows us to do it in the LLC as a primary named, or if they require the tenants, the trustees as primary named insureds, then we flip and we add the other as additional insured.
Okay, when you say trustee, you mean the LLC member or the manager?
Yes, excuse me. So the LLC members on that will be listed. Same thing goes for owning a property in a trust. Same thing that goes in the owning property in a tenants in common or a partnership. All of them, we're going to do what the carrier allows, and then add either the trustees or the LLC members as the additional insureds. It's going to all depend on the carrier.
Yeah, how many names can you have as insured or additional insured?
Yeah, so that does get tricky. That is also a situation with the carrier. Some are 2, some are 4. You know, it's one of those situations that it's not going to be perfect. And in fact, we ran into one recently where I had no solution. Everyone said no, which was an LLC. Within that LLC was 2 trusts that were the members of the LLC, and then within those had a couple, a husband and wife on each of those trusts. And they wanted all parties in all of those formats named, and no one would do it.
Okay, so I actually have a situation like that.
Yeah.
So in that case, if it's if the LLC, if all members are in the LLC and the LLC is insured, then the insurance company, in the process of a claim payout, they will pay the LLC.
Correct.
And then everybody will be covered, right? It just needs money just needs to be distributed by the LLC managers.
Yeah, I mean, at the end of the day, it isn't. It's not perfect, and it's not ever going to be perfect to the way someone may want it. But it doesn't mean that there's not coverage. So if the named insured is an LLC, if that LLC is sued, then it's covering the people that are in the LLC, and it's going to defend the LLC, and it's also going to pay to the LLC or pay out in defense of the LLC. So the whole point of the LLC is to limit liability. So technically speaking, if you've named the LLC as the insured, at that point you've protected the LLC and its members. So we get a little bit nitpicky in this world when it comes to some of that, and I understand why. I mean, lawyers are looking for any reason to pierce a corporate veil or an LLC veil, but insurance companies, when you are naming something additional insured, you are naming that entity as additional insured, and so technically insurance companies don't want to defend other things that LLC is involved with. So there will be questions. What else does this LLC own? And that may preclude you from getting the LLC to get insurance on a property if the LLC also owns a car wash and other things, because that brings in that liability for other items besides this property.
Okay, so we have the LLC, which has some level of liability protection. And then the property insurance comes with some level of liability coverage if we request for it. And then above that, people are supposed to get umbrella policy, but umbrella policy is specific to the owners or specific to the LLCs, and they don't cross, right?
Yeah, so umbrellas are a little bit, they're a great idea. First, best thing you could get, cheapest insurance you could buy to protect your assets. And that's what an umbrella is. It is an asset protection tool, and that's it. It's the number one way to protect whatever you have investment wise for a cheap cost. Now, with that said, it's not perfect either, because someone will own a property and put it in an LLC, and then they want that LLC to be covered by their personal umbrella. But the minute you put in an LLC, you've created a business, and a personal umbrella will not cover an LLC because it's a business, and a personal umbrella only covers personal assets. So in order to get an umbrella over an LLC by name, you would have to have an umbrella over that LLC specifically.
So even if the LLC tax return is actually part of the personal tax return as a single member pass-through entity.
So taxes have nothing to do with insurance. We don't collect social security numbers. We don't report to anyone. The IRS has no idea what insurance company you have. So the insurance is based on the title. So if the title is held in an LLC, then the insurance, it cannot extend to an LLC by rule. What an insurance umbrella covers is what's called follow form. And so that means it follows the form of the policy underneath it, because the umbrella has its nature, it's a cover. And it's a cover over whatever you put underneath the umbrella. And so if what's underneath the umbrella, for example, if you don't have insurance on or no liability on a property, the umbrella doesn't cover it, because you now don't have anything under it for that umbrella to follow. And so umbrellas have limits that they require, so that they have to follow form over higher limits. Typically it's 300,000 on most properties, 500,000 in some cases, but when you have a business of any kind, a personal umbrella will never extend to cover that business.
Okay, so then by that same token, I assume if, let's say I have 3 rental properties in my personal name, and I have a hail damage claim on one of the 3 rental properties, and I'm buying a new rental property, so they ask me if I have done prior claims, do I need to include the claim history of the rental property that had the hail insurance claim?
Yeah. So it will come up automatically if that rental property is in your personal name, because that report will be run based on your name and date of birth. So if a insurance company is asking if you have any claims, it depends on what they're asking. If they're asking if you've had any claims, period, or if you've had any claims on a particular property. Insurance follows the address and then the client. So some companies will only pay attention to that address, which means that if you just bought a house, but that person that had it before you had 3 claims on that house, that's going to get you in trouble, because insurance companies are looking at that house as a loser, as one they're likely to pay a claim out, because 3 claims have already been paid out, and that will make it difficult to get insurance. They shouldn't charge you for those claims because they weren't your claims, but an insurance company could not offer insurance because of those claims.
Got it. Okay, so if there was a fire damage before on a multifamily commercial property, then that may affect my ability to get insurance when I buy the new property.
Correct. Yeah. And in commercial, things are looked at a little differently. Frequency is definitely an issue, but they're looked at a little differently on commercial. They'll ask for details of why there was a fire, what happened, was it remediated, things of that nature. Whereas on personal insurance, there's some companies, if there's any claim, doesn't matter what type, even if someone just did an inquiry for $0, the insurance companies will not take a property with any claims on it at all.
Wow, even an inquiry.
Yeah, so if it shows up on what we call the clue report, which is the report where we run claims, some companies, they just have they have a hard line, no claims in 5 years. If there's a claim on there, they just automatically decline.
Lovely.
Yeah.
Lovely. Okay, so 2 other questions. Insurance specimen. Would you explain a little bit what is insurance specimen? When should we request a copy of it?
Yeah, so specimen is really just the form. So it's a list of forms. It's called specimen forms. It's a generic policy with no one's name on it. So no, you would never request it. It's most people are never going to look at a policy form. It's pretty in-depth at that point. You're looking at what's included, what's excluded. You're looking at the forms of an actual policy. So we will, in commercial insurance especially, we'll get the specimen forms because every carrier's forms will be different. So that will also show a list of exclusions, which we're always paying attention to on commercial. On residential, the policies which are built on a HO3 form, they're all the same. It's then how you endorse that form to create your package. So if you didn't add replacement cost personal property, you didn't add extended replacement, you didn't add loss of use, you didn't add these things, then your policy form is still going to be standard. But on a commercial specimen, each carrier's forms could be different.
Got it. Okay. All right. And then what is minimum earned premium?
Sure. So that's a non-admitted term. We talked before about non-admitted versus admitted. The general recap is non-admitted is policies that are not reviewed and approved by the state of California. With those, they do come taxes and fees. Admitted carriers are they could still include an inspection fee or something basic, but there's not going to be state taxes and there's going to be no minimum earned premium, which means you can cancel at any time and you'll be prorated refund. Minimum earned premium is a way for insurance companies to collect at least some of the premium if you cancel early. So in comparisons alone, prepayment penalty type concept. Right. Minimum earned premium almost every time is 25%. So that means you need to get through the first 90 days of the insurance before they will issue you a refund prorated from there. You can still cancel a month in, but you're still only going to receive 75% of the policy premium back. And usually that's because the insurance company has gone through a decent amount of effort to underwrite and issue the policy. And they're really not in the market to be a holdover for a week. Those types of policies are meant to be kind of a permanent policy. So they have a minimum earned premium of 25%.
Okay. I was involved in a construction liability policy. This is like 20 years ago. And I think their minimum earned premium was 1 year.
Yeah, and that's not uncommon for builder's risk. So we talked a bit about the course of construction. I know we'll talk more about it. Usually when you're asking for less than 1 year policy, very often the carrier will have fully earned. And that's the reverse of minimum earned, which is what you were just mentioning. Fully earned means whether you want it or not, you have the policy for the entire term of the quoted premium.
Got it. Okay. So Sterling, who pays for insurance brokers? Is it always a separate charge or is it included in the insurance premium?
Yeah, I mean, in most cases, there's no fees to work with a broker. I'll speak for myself personally. We do have the ability to charge broker fees, and 99% of the time, we don't. We're paid by the insurance carrier, just like any agent would be that works for any insurance company. Anyone who's charging an additional broker fee is typically getting payment on both sides of the policy. There are certain situations where broker fees make sense. If something's going to be very, very labor intensive, and you're going to spend a lot of time servicing, creating certificates, doing a lot of work post binding, it won't be uncommon for someone to charge a broker fee. But typically speaking, you should see a carrier fee if you're working non-admitted, but not typically going to be charged a broker fee by your agent.
Got it. Okay. So
it's actually also illegal. So everyone keep in mind, it's illegal for you to charge a broker fee on an admitted product.
Okay. I think I'm sure I have seen some broker fee in some insurance policy. I just don't remember where.
Yeah, you try. I mean, we try to avoid it. I mean, that's the goal is that you're being compensated for the work you do already. Charging an extra fee is not always necessary.
Got it. Okay. Anything else you think our investor clients should know about rental property insurance on residential properties?
Yeah, I mean, I think the glaring hole in the insurance industry right now in California means just like anything on homeowners or any kind of property, get to it early, especially if you're going into a purchase. Try to establish the insurance early and often because it's not simple. The options are limited; they take longer, and waiting to the last minute to acquire insurance because the lender is now saying, "We need this tomorrow to fund." You're never going to find your best option at the last minute.
And I think you also said this last time. This is not the time to rock boat to shop for rates.
Yeah, it's there. I mean, there's times. I mean, there's no reason to not question it. However, changing insurance for a nominal amount to be re-underwritten is probably not worth it because you're opening full inspections, full questions, and the opportunity for the insurance company to cancel a policy after inspection for a nominal amount. Now, with that said, there's a lot of companies that are expensive and that aren't giving you anything for that. So if your policy seems out of whack, just have a conversation, take a look at it, have someone review it, and see if what you have is the right fit. And hopefully that person's transparent and tells you what the risks are.
Yeah, I would definitely do that with you in asking you to review the policies that we have on other property, just so that I understand what exactly I got. Did I get all the necessary coverage that I need?
At that point, if you've looked at it and you reviewed it, you have the peace of mind of knowing there's no glaring holes in the policy, we're not overpaying, and it's something that can just be looked at over time as the market gets a little bit better and companies open back up.
Right. Great. Well, thank you very much, Sterling. That pretty much does it for this segment on rental property insurance policies. Thank you, everyone, for watching, and please be sure to subscribe and follow us for future videos, including additional segments from Sterling about property insurance. And if you have any questions or suggestions for future topics, I'd love to hear from you. You can put them in the comment section or email me, and we will be sure to address them in a future video. Again, thank you for watching and stay tuned for more.